In this video, I'm going to share with you investing advice that I never got, most of which I learned the hard way after almost 40 years of investing. Hi, I'm Camille Gaines. This channel is all about helping people build wealth with strategies that don't take decades for those of us who don't have decades, and creating alternative income streams for those who don't want to deplete their retirement savings to live. In this video, I want to tell you about some investing insights, some investing advice that I wish I had gotten a long time ago when I first started investing. As you may have heard here, that was in my early 20s, so it was quite a while ago. The very first thing that I would say about this is to recognize that buying assets when they're undervalued can magnify your wealth building opportunities. Now, while it seems really scary after bear markets, during bear markets, late stages of bear markets, this can be an ideal time to buy assets that are undervalued. The other time that this happens are just sort of anomalies. Things happen and you're able to buy assets that are undervalued relative to other assets at that time during that time frame. So that's the very first thing I wanted to share with you. I'm going to look at my notes. The next thing I want to share is that controlling risk is almost as important as making money. It's super easy to lose sight of this. The older you get, the more important it is because you have less time to make up for your mistakes. So many investors, especially my age, went through the bear markets of the 2000s and experienced this firsthand. And once you get behind in your plan, your wealth plan, wealth accumulation plan, it's hard to catch up. So avoiding those losses in your investment account is huge, and it's almost as important as making money. The third thing I want to share with you, I love this one. Simple tactical strategies can be used to build wealth no matter what the market is doing. Now, most people are really familiar with just investing in stocks and bonds. Maybe some international stocks are thrown in, or emerging market stocks are thrown in, perhaps some, municipal bonds are thrown in. But for the most part, those are the main categories that we're taught to invest in. If you look at any almost all information nowadays, that's what you're going to hear is you invest in stocks and you invest in bonds, and a well-diversified portfolio is considered investing in different types of stocks, like I was saying, international versus maybe U.S. I'm a U.S. investor, and municipal bonds versus treasury bonds, for example. But tactical investing strategies actually invest where the opportunities are presenting themselves in the financial market. So instead of just saying, okay, here's what you need to do, put a certain percent into stocks and a certain percent into bonds based on your age. Instead of that, the way that tactical investing works, tactical strategies, is to say, hey, right now stocks look undervalued, or right now international markets look undervalued. Right now it looks like you need to reduce risk, so you may want to have a position in treasury bonds, or maybe gold, or some other type of asset. So tactical investing it's a level above just buying and holding investing based on your age and your risk profile at any given time, and then sticking with that no matter what. It's about seeing the opportunities and investing around those opportunities. Is it harder? Well, you know what? It seems like it would be, right? It seems like you would have to be brilliant, because we all know you can't pick the exact tops and bottoms of, these cycles in these various markets. But the great thing is that there are actually some strategies that have been developed by, well-known experts around this. And what's really cool is that you can go back and look at testing to see how these strategies would have done over 20 or 30 years. So you're able to feel fairly confident about the tactical investing strategy that you're looking at. This is what I teach my clients in my wealth coaching program to do, is understand how this works, because it's more advanced than just putting 40% in bonds and 60% in stocks, right? But it's very simple once you understand it to implement. Next thing that I want to share with you is that alternative investments such as rental real estate, small business, even some more advanced stock investing can generate significant income almost all financial planning and retirement planning is based on withdrawing a certain percent, usually around 3 to 4% of your savings every year to live. Well, what you can do, and what we did, because we, as I like to say, stumbled into early retirement, what you can do is generate alternative income streams that pay your bills. And this allows you to get your income from that versus withdrawing your savings to live, which is not really income. It's spending your hard-earned savings and the related investment returns that you've gotten. So this is really a mindset shift. You know, mindset shifts are something that I really work with clients a lot on because we're so conditioned to think a certain way about how things are supposed to happen. And there's so much more. If you look to see what are the wealthy doing, you know, they're not withdrawing. They're investing in assets that generate income from them, often with tax benefits and often with wealth building opportunities as well. Then the next investing advice that I didn't hear that I wish I had heard is that it takes a mindset shift, as I was just touching on in the last point. We're so conditioned that our financial independence, our ability to have funds for life, will come from a job and or it will come from investing in stocks and bonds with a standard asset allocation. And then it will come from Social Security eventually. And if we're lucky, maybe there's a pension, maybe an annuity, you know, but this is it. This is all people talk about. And this is all people think about. This is how they're conditioned. And it sort of blows my mind that more people aren't looking at alternatives, aren't thinking it's possible. And I think that's why, because of mindset, I think that's why this isn't happening, because we're so conditioned to believe that these things are all going to fall in place and then we're going to have plenty of money to live how we want for the rest of our lives. And we can see that's not happening. So with a mindset shift, there are other possibilities. Absolutely. That's what we've done. We can see it with the younger people, as I call them, the millennials. You know, they're knocking it out of the park with this. They're looking at this differently and thinking of this differently, many of them. So that's what I wanted to share with you in this video. If you want to learn more about alternative investing strategies and this type of thing, be sure to watch this video next. Thanks for watching.